Hello, guys. If you came up with a brilliant idea and want to start a Web3 business in blockchain space, and you would probably need some funding. And our guest, Sarah Gottwald, who is a managing director of Blockchain Founders Group, can tell us how to proceed in this case. Hello, Sarah. Welcome.
Hello. Super happy to be here today. And thank you for having me.
Yeah, thank you for joining us. And could you, first of all, tell us a bit about yourself, about your background, and how you joined crypto and what you like here?
Yes, sure. Thank you for the question. So I previously had a classical corporate career. So I was working for BMW. I stayed there for 9 years. I was 4 years in finance and 5 years in strategy, doing mainly corporations and M&A topics. But since 2017, I was super curious and interested about blockchain. And of course, Bitcoin was the first thing that I saw. And so I started reading a little about that. And but at the beginning, it was super hard for me to get into the space because I didn't know anybody. And to be honest, especially as a woman, it's, I guess, even a lot harder because there was no friend of mine who was already in the crypto space for several years. So I kind of started on my own. And then I started reading more in 2020 and more in 2021. And so approximately 1.5 years ago, I decided to quit my old job. And I wanted to work in the Web3 space as a professional. And so 1 year ago, I started with Wenigan Ventures. It's a Web3 VC, so venture capital company, only investing in blockchain, crypto, Web3 startups. And so this was my first professional experience in that space. And I was able to learn a lot. It was amazing. I was able to grow a huge network. And in January this year, 2023, I got the managing director of Blockchain Founders Group. And we are a startup accelerator, mainly focusing on the accelerator part. I can let you know a little more later on. And also doing classical investments. So this was my story in a nutshell.
Yeah, thank you. Okay, and as you've already mentioned, you are working in a fund, in the venture capital fund. For me personally, I don't know anything about what the difference is between a business angelist or a venture capital. So I'm really curious to know, and I hope you elaborate on this today. So could you tell us a bit about your Blockchain Founders Group company, what it deals with, so how it works, just on the top high level?
Yes, sure. So these are like a little two different things. So what is venture capital in a classical way and what we are doing? Maybe I start with what Blockchain Founders Group is doing. So we are a startup accelerator. So basically, people can apply for our program. So we have a program approximately 3 months, and people can apply. We are very, very early stage. This means if you want to fund a company and you only have an idea, maybe you have a team, maybe you don't have a team, but of course you have to have knowledge, you have to have some experience, then you can apply for our program. And we start our program 2 times per year. And last time we had more than 400 people applying for the program. And of course, there's a selection process. And at the end, we decided to take approximately 60 people into our program. And then we guide them through 3 months through basically all the questions people can have at the beginning if they start a business for the first time. Because starting a startup is super hard. Because, of course, you have to have knowledge about your product and you have to have a great idea. But nevertheless, there are many more things you should know about. For example, something that is super important is the topic of product market fit and product founder fit. So is there really somebody out there in the market who is willing to pay for your product? Because you have an idea and you think the idea is amazing, but are there people out there who are really want to spend money for your idea? So we do a lot of market tests. We help them find them out whether people really want to pay for the product. And so how to communicate with investors, how to do fundraising, like we will talk about that later, but also, how to find a team, how to work together as a team. of course, more information on the technology, how to build a pitch deck, how to build a homepage, taxation, legal things. There are so many things you have to consider at the beginning. And within our program, we have like touch points with the people 3 to sometimes even 5 times per week. So we really guide them. We do a lot of workshops with them. We also have external experts coming into our program on a certain specific topic, giving some guidelines, giving some homework, and then we guide them through. And at the end, we decide whether we believe in the team, whether we believe in the idea, and so we decide whether we want to invest. This is what we are doing, and it's amazing because you get in contact with super interesting people, and of course it's always nice if you see people at the very beginning, and then how they rise and hopefully how they succeed some months later. So this is what
it should be very inspiring.
And of course there are so the acceleration business is nothing totally new. So Y Combinator is, I guess, the biggest accelerator that is known. It's based in the US. So of course there are more companies doing similar things. But nevertheless, we are really our USP is really focusing on the Web3 space and very, very early stage. Because, for example, sometimes you can apply for programs, but then you have to have an MVP. There needs to be some revenue. So some accelerators focus on later stages, but we really want to help at the very beginning. And sometimes there's not even a company, but only the idea and the team. And this is where we start working together with the founders.
Okay, great. And what do they need, first of all, to apply? Well, okay, if I have an idea, do I have to have some sort of documents to be filed to apply, or what is the procedure?
Yes, of course. So you have to fill out an application form. You have to send in your idea. You have to pitch. And we are screening your document. And if we like what you're doing, then we have like a short interview with you, about 50 minutes, to kind of figure out. So for us, the most important, there are 2 important things at the beginning. Of course, the idea. So what are you building? What do you want to do? And do we see that there's a need in the market? And secondly, how is the personality of the people who apply? Because as I said, if you start a startup, it's super tough. There are not so many holidays. It's a lot of work. And you really have to believe in your idea and what you're building to be successful. And you also have to have, it's hard because you will get a lot of no's. Even if you're super successful at the end, at the beginning, people are super skeptical. They are not sure whether they like your idea. So you have to pitch like 100 of times to, at the end, get funding and to grow your business. So I think the personality, so to have somebody who's really believing in his or her idea is like the most important thing. And of course, you have to be willing to pivot, means to change, to adapt your idea. For example, if you get a lot of feedback that this is maybe not the right niche or not the right point of time, then you need to kind of switch and change a little.
Be flexible.
Yes, sort of. Yes. And you also ask about the, so what is venture capital in theory? Do you want me to talk a little about that as well?
Sure.
So venture capital is a type of private equity funding provided to startups in an early stage, mostly. And so what it means, venture capital invests in high growth potential startups. This means you have to have a huge upside, at least the potential to have a high upside. I mean, unfortunately, many startups fail, but this is quite normal. And so venture capital provides equity. So provides money for equity. So you get a certain amount of money for a certain share of your company. You have to give that share away because, of course, the people who give you money want to participate in the success of the company. And so for VC, the goal is always to identify the most promising startups, which is super hard. And so the typical investment size you kind of start with small tickets, angel tickets, if you're small as well. So they start normally around 50K and can go up to 200 or 300K. And then if you're getting bigger, it can even be millions, so up to 5 or 10 million. And yeah, it's a high risk business because like the failure rate of startups is high. So it is quite normal that you make like, I don't know, 10 investments, maybe one is super successful, some are kind of okay, and a lot of them will fail. So, what we see is basically about finding the right people, finding the right ideas, and at the end, at least 1 out of 10 ideas should be a successful one, because if not, you might lose a lot of money.
Yeah, definitely. And what are there a lot of startups right now, as we are still at the bear market? So is there still a lot of interest in the space and many newcomers?
Yeah, well, so what we experience is people are still super interested in building in that space. Because like if people understand the basics and the technology, they know that the technology won't go away from today to tomorrow. So the technology will kind of stay. We see that, of course, the AI space is growing at the moment. I mean, there's a hype all around ChatGPT. And so some people also switch to the AI part. But nevertheless, in the long run, maybe those two technologies kind of merge so that you have AI with blockchain or blockchain with AI technology, that you kind of combine those two things. And it's still two different technologies. So what we experience at the moment, especially the people who want to build in that space, who want to really work with the technology, they are still interested, and they still want to be part of the Web3 space.
Okay, great. And I also wanted to ask about that business angels. Who these are?
So business angels are people, mostly high net worth individuals. So people with a lot of money. And they do, it's called angel tickets. So they provide money to startups in a super early stage. Because the VCs, the venture capital companies, normally, so what is happening? Venture capital have money. It's not their own money, but venture capital companies also need fundraising. So they deploy money from other people. And quite often they start investing in startups, at least if there is like an MVP, if there's a little traction, if they already have a little revenue. But quite often startups need to get some money at least a little earlier. And this is where those angels come in, basically. And they provide small amount of money, but it's only like one person. And that one person very often also works closely together with the founders. And it's super important for the startups, especially at the beginning, to have those angels. And maybe in addition, if you ask what are like alternatives to venture capital money, so you have like venture capital, you also have the angels, and some startups try to do bootstrapping. This means they basically they use their own money, and of course it's possible the revenue, but then quite often the growth is super slow because you don't have so much money. But bootstrapping. Sometimes, especially in the Web3 space, you can get grants. So you have to apply for a certain program and you kind of can get grants, so free money. But of course, there is like a huge process in the background and it's not that easy to get those grants. But this is an alternative as well. And one last possibility are like bank loans. But to be honest, especially for a startup, it's super hard to get a bank loan. So normally bootstrapping, angel investors, and VCs are the common methods how to fund a startup.
Yeah, okay. And what would you advise to those people who are just thinking about applying? How should they act to avoid probably the most common failures?
Oh, well.
Yeah.
You mean applying for our program, or you mean if they want to apply in general for money, so for doing fundraising, if they are already a little bigger?
I think that for fundraising already, yeah.
Okay.
How do you
So
think?
if you want to do fundraising, it's super important to that at least fundraising is nothing you can do at the weekend or in the evening, like 1 or 2 hours. Fundraising is like a full-time job. In like easier times, because now we are in the bear market, you can do maybe fundraising in 6 to 8 weeks. In the current times, it even could take a lot longer. So there should be at least one person like for being fully dedicated to fundraising, maybe 2 months, maybe it even takes 3 months. Mostly it must be the CEO, because he is the person talking to the investors. He's the most, the person that is going out the most. And so you kind of have to first like think about a strategy. So which kind of amount do you really need? What is the timing? What is the dilution of ownership? This means how many equity can you give away for how much money, basically. You really have to think about the terms of the investment. Means there's a lot of legal things involved. And of course, for legal, you always need a lawyer. You can't do it on your own. So be prepared, because if the contracts are not good, or if you have mistakes in the contract part, this is going to be a huge problem at the end. You should also think about the type of investor, because you can differentiate between smart money and dump money. And dump money means you get money and you have money, which is great. But if you have smart money, this is even a lot better. And smart money means there is somebody who can also help you with many other things. So, for example, with business development, he can make introductions, he can do brainstorming sessions with you. And so think about who might be the right person investing. And especially, for example, if you have a huge VC with a certain name, then it's a lot easier to get more people to invest in your company. Because if there's one VC or one person who's very well known, it gets a lot easier, because people kind of
you get trust.
Yes, exactly. This is super, super important. And maybe of course you really have to stick to a certain process. Don't be lazy on that. Reply in a nicely manner to the investors. Communicate in a nicely manner. Have the pitch deck for sure up and running, ready. Homepage needs to be ready. So really take care, especially about the basics, that you don't make any mistakes. For example, if you write an email and attach the pitch deck, don't forget to attach the pitch deck. So sometimes it's really about the basics, to make sure that the VCs trust you. Because if you make mistakes in small things, you lose trust. Because then people are like, okay, if he or she can't handle the basics, how could he or she grow a whole startup? So really take care about the minor things, and be really precise on what you're doing. And of course, you need to prepare the pitch.
Yeah.
You then have the chance to do pitching. You also need to be prepared. If you like, I can also tell you a little about that. Let me know.
Yeah, okay. And I think that in your accelerator, you are dealing a lot with this training, how to pitch.
Sure.
Okay, good.
This is important for us.
If you can somehow categorize a bit the startups that you have right now in your pipeline, what products or what services, you've already mentioned that some of them are switching to AI, but what other services are they sort of have ideas to provide?
Yeah, well, it's not because at the moment we have nearly 20 startups, so it's not that easy.
They're all different?
Sorry?
They're all different?
Yeah,
Different
well, so of course
types?
they cover different spaces. So let me give you some examples. So, for example, the refi space, so the regenerative finance space, is growing at the moment. So this is like the ESG part of the blockchain. So really taking care about the environment. For example, until 2030 in that space, there should be more than 50 billion. So the space is growing by 15 times, approximately. So this is what is calculated at the moment. So we have, for example, startups working in that space. The refi space started with a token. So you have the CO2 tokens and the certificates. And in that space, you have the problem that sometimes the certificates are only like PDF files, which can be copied and used several times. So, for example, in that space, startups are working. We also have some startups working in the DeFi space, really making it easier for people to access the DeFi space because it's super hard. It's still, the user interfaces are horrible. It's hard to access. It's hard to understand. So we have startups working on that part. And then, for example, we also have startups working in the education part. So how to do education in Web3, how to bring more people in the Web3 space, also helping them to get jobs in the Web3 space. And maybe another example is, for example, payment systems. So there's a startup bridging payments between Asia and Africa, for example, because especially in Africa, you sometimes have fees up to 25%, which is like super high. And the blockchain can help that to make it more transparent and especially bring the fees down. So yeah, so this is these are some spaces. But of course, we also have startups working on NFT topics, working in the metaverse. So we are super agnostic. So we don't limit ourselves to only a certain area, but we are really widely different.
I see.
areas.
Okay.
Yeah.
And I have one last question. A couple of days ago, we had an interview with Elaine Marler. She is a co-founder of Women in Digital Assets Forum. And she said such a thing that currently women get around 2%, as far as I remember, of venture capitals. Just only 2%. What do you know about it? Whether it is true or not?
Yeah, well, to be honest, I know exactly the same number. So as from the studies that had been made, I can say that this number is true and is right. I think it's super bad. So there are some biases coming in. So in the VC space, there are more men than women. And people tend, and this is totally normal, to like people more and also to give money to people that are similar to them. And so, of course, if in the VC space more men are working, it's natural that this is one of the biases, that more men get money. And another thing, for example, is another bias that is a huge problem, but if you are aware of it, you can kind of handle it. So women get different questions while pitching. So men get, for example, promotion-focused questions like, how huge can the market get? What are the potentials? How big can your startup become? And women sometimes get questions that focus more on the problem side. So more prevention days, like when do you think you will be able to do the break even? Which problems do you see? What might be a potential downside? So women get different questions than men. And this is one of the main problems. And what I can say, there are some VCs now really focusing on startups where at least one woman is part of the founding team. And what I really experienced, like there's a lot of things are ongoing at the moment. And I hope it will change in the future, because what I really see is that there are so many initiatives helping women to grow and to get money. So what I see at the moment, it's a really big advantage if you have a mixed team, because then you have still the possibility that men are pitching to men, but you have also the possibility of accessing all those networks who really try to help women and provide money, especially to mixed teams and to women-founded startups. So from my point of view, it's more important than ever to have mixed teams.
Yeah, I agree. Absolutely great. So I hope that in the future, in the nearest future, we'll see the change.
Yes.
Okay. Thank you so much for answering the questions. It was really very interesting. And right now, as always, at the end of our interview, we have an announcement for our users that you guys can come up with different questions to our guest. And in several days, we will pick up the most interesting question. And the author of the question will get a Bitcoin mining contract from EPES. So make sure to participate. Okay. Thanks so much, Sarah, for joining us.
Thank you so much, Anna, for having me. Super happy that I could be part of your podcast. And thank you.
Yeah, I hope to see you soon.
Thank you.
Yeah, bye-bye.